Hello and welcome to this special report here at XM.com. We'll be taking a look at how commodity-linked currencies have been performing and where those currencies are headed next. I'm Maria Pachurdes, and joining me is Senior Investment Analyst Haralambos Bisuros. So Haralambos, the Aussie, Kiwi, and loonie, known as the risk-linked currencies or the commodity-linked currencies, came under selling pressure just before the turn of the year. Until recently, there was a strong correlation between these three currencies and the S&P 500. Why, though, now has this correlation weakened? What are the reasons behind the breakup?
Hello, Maria. Yes, the correlation between the risk-linked currencies and Wall Street has broken lately, and this is due to a blend of developments. First, it is the greenback's strength due to the market's repricing regarding the Fed's future course of action, with the impact of this notable repricing on the stock market being minimal, as investors remained willing to buy stocks even as rate cut bets were pushed back. Perhaps they kept adding to their risk exposures on the logic that there are still future growth opportunities related to artificial intelligence to be priced in. Now, if that was the only reason, though, the greenback would have gained similarly against all these three currencies, but that was not the case. The loonie performed much better than the Aussie and Kiwi, which up until recently were among the three worst performers. The other one was the still bleeding yen. This suggests that besides the dollar and the Fed, there are other forces to be considered. One that may be weighing on both the Aussie and Kiwi, and one that is helping the loonie to avoid being severely damaged, despite the Bank of Canada dropping its hiking bias at its latest meeting. Now, the force that added extra weight on the Aussie and Kiwi is called China. The uncertainty surrounding Australia's and New Zealand's main trading partner prompted investors to abandon Chinese equities, with Aussie and Kiwi traders focusing more on that rather than the euphoria on Wall Street. As for the loonie, it may have received a helping hand by the recovery in oil prices, which is driven by the Middle East crisis. Having said all that, monetary policy has also played its role. Both the Aussie and Kiwi posted their slides after the RBA maintained its tightening bias at its first policy decision for the year, and after New Zealand's employment report for the fourth quarter came in better than anticipated. The Kiwi received an extra boost on Friday after the Australia and New Zealand banking group said it expects the RBNZ to lift its official cash rate by another 50 basis points.
So where are these currencies headed next, and which could perform better?
Putting them all against the dollar, they are likely to come again under selling pressure if the market continues to upwardly adjust its Fed implied path, and this was the case yesterday after the stickier than expected US inflation data. However, against each other and amongst the three of them, the loonie may be the one to fall from first place to third. The Bank of Canada is the most dovish central bank among the three, while a resolution of the conflict in the Middle East may remove support from oil prices. But even if there is no ceasefire, as long as the situation does not escalate into something bigger, the market may stop paying attention at some point. After all, this is what happened with the war in Ukraine. Now, putting the Aussie against the Kiwi, the latter has been outperforming and may continue to do so if the market remains convinced that the RBNZ is not done raising rates, and especially in the extreme case they hike in February and signal that another hike could be looming as the ANZ projected. However, considering both the RBA and RBNZ implied paths, the risk of the RBNZ disappointing the market is bigger than the RBA. Therefore, should the RBNZ appear less hawkish than the market anticipates at its upcoming gatherings, the Aussie-Kiwi pair may be poised to rebound. Now, as for China, the latest rebound in Chinese stocks due to the decision by regulatory authorities to step up efforts to stabilize the market is a positive for both those currencies, which may allow them to outperform the loonie, but it's a zero-sum game when they both enter the same ring.
Arlimbos, thanks so much. And thanks for joining us for this special report here at XM.com.